Welcome to today's training. So today's training, of course, we're going to be focusing on Forex. Okay, so I've given us everything we need. Okay, all the videos we need. This is just a recap. This is just a summary. Okay, I just want to summarize what is in the video. Everything you have is already in the video. So just want to add in this in order for us to make it much more easier for us to understand what is in the chat in the videos. Okay, so now let's get started. Now let me take us straight to the chart. Okay, this is the chart. This chart represents the market. Okay, also known as according the market structure. Okay, the forex is all about price. It's all about price. Okay, we have various ways, various instruments, various methods to analyze the chart. Okay, there is candlestick method and so many other methods, but price is the ultimate. Okay, price is the ultimate. Analyzing the price is the ultimate. The movement of these candles, what you're seeing here is the red and the green candle. The red candle represents sell, the green candle represents buy. Okay, the movement of this candle is known as price action, which is the ultimate. The market structure is either market is going up or is going down or sideways. Okay, that is what the market is all about. It's either it's going up, it's going down, or it's going sideways. Okay, that's what the market moves. And in forex, the best way to analyze forex, you follow the trend. Okay, you follow the trend. You don't predict. Prediction is different from when you are following a trend. Okay, look at the trend. Look at where the market is going on that day. The moment you open your chart, the first thing you check is the trend. Okay, the trend will determine your analysis. Okay, it's not that when the trend is going up and your analysis is reading something else, then you definitely you lose out from the market. Okay, so forex is all about price. It's all about price, and you can do that well when you study the chart. Follow the movement of the chart. Follow what the price is saying. Okay, we are the big boys are trading. All right, so these are the areas we need to identify and follow the chart. It's also good for us to know one or two candle patterns. That is already handled in the video. Please check the video and you see the patterns of the candle. Just only have to just try to master about 2 or 3 thereabouts. Let's say 3 candles, shape of 3 candles. That will be okay. All right. So if I spot anyone in the chat here, I will definitely tell us what it is. Okay, so let's look at it very well and see. So what we do, like I said, is to follow the trend. Look at the market, where it's going, where the price is going. That is what we have to identify, and also learn how to follow it and take your trade. All right, so now this is the chart. Okay, this is 15 minutes chart. If you look up there, look at the arrow, my cursor, you can see it's a 15 minutes chart. Okay, in any chart, we have various time frames. We call it time frames. Okay, and these time frames we have various. You can see time frames. These are time frames. Okay, we have 1 hour time frame. We have 5 minutes, 15 minutes, 4 hours, and daily. Okay, in the daily time frame, we use the daily to identify. You can use it to identify where the market is going on that day. The structure of the market, where it's going to. So use the daily to understand the trend, where the trend of that day is. Then you use your 4 hours to maybe map out the strategic points. Okay, the resistance and the supply. Okay, then you enter the market using either 15 minutes or 5 minutes to enter the market. Okay, to take a trade. Take a trade. right? So that is how it is. So this is a this is a chart. Okay, this is USDP JPY uh, uh, chart. Okay, it means US dollar against Japanese yen. So you need to know all these symbols. Look at it on your right hand side. Okay, so before going to that, sorry, I was too fast. I didn't tell us what I'm using. I'm using TradingView. Okay, go to tradingview.com. When you go to tradingview.com, this is it. Tradingview.com, you register. Okay, you go to the site and you register. Tradingview.com. You go to the site and you register. Okay, so they have various plans. You can buy various, subscribe to various plans. Okay, you can subscribe to various plans if you want to, but I have not. I have been using it, but I'm using the paid. I'm using the free version. Okay, this is a plan. Like I said, you go to tradingview.com and you register. You know, I mentioned it before to us that we use TradingView to analyze the market better. We can use Meta 5, Meta 4 to do that also, but TradingView is very flexible. Almost all the experts in trading, they use TradingView. Even um, some brokers, their charts are connected to TradingView. Okay, their chart is connected to TradingView. Most of the brokers. So TradingView is very well accepted. The same thing with Meta 4, Meta 5, but it's more flexible as far as I'm concerned than Meta 4 and Meta 5. So like I said, they have various plans if you want to. Though I have not used it before. I'm only using the free version. Okay, but I've seen there are some limitations. Okay, you can see here I don't have more than this in the forex section. You can see I only have few of forex currencies because if you're using if you're using the paid version, you have almost everything. Okay, so that is that. You also, like I told you, forex means in forex market you see pairs. They comes in pairs like this. This is euro against US dollar. You can see it. This is GBP USD. This is British pounds against US dollar. GBP USD is the short, the abbreviation, the short form. This one is GBP JPY. That is British pounds against Japanese yen. USD against Canadian dollar. You have them like that. You have USD against Swiss francs. Let's see, Swiss franc. This is USD CHF. It means US dollar against Swiss franc. Like so many like that. So just go and check them out. So that is that. Now, like I said, go to tradingview.com and use the chart to analyze. So you don't take a trade here, but you can still take a trade if your broker is connected to TradingView, where you can log in. Of course, it will synchronize. When you take a trade here, it also immediately goes to your brokers. That is if your broker is connected to TradingView. If not, just use it to analyze, and after analyzing, you go to your own broker and take your trade over there. Whatever you get here, whatever you arrive at here, you place it on your broker's chart. Okay, that is that. So now let's take this as an example. Like I told us, if you want to take a trade, if you want to open the chart, you can go to the 1 day chart. This you can see 1 day. You go to the daily chart, go to 1 day, or you can go anyone. You can go to 6 months, 3 months, 1 month. Okay, so you go to 1 day just to get what the market is saying, get overall view of the market. You can see in my 1 day here, the trend for US dollar against Japanese yen is downward trend. You can see it's downward trend, meaning it's going down. Okay, the market is on the down side, so sell side. Okay, so you can see it. Then let me move to the 1 hour time frame. I'll move to the 1 hour time frame or 4 hours time frame. Okay, let me go to 4 hours time frame. Okay, this is my 4 hours time frame here. You can see the line I drew in the 1 day. can see how it is here. So it shows that it's still going down. You see, it's going down. And what's happening here is that you can see it's giving us from up there, down here, higher high, lower low, lower high, lower low, lower high, lower low, lower high. You can see lower low, lower high, lower low. So that is what the market is saying at the moment now. It's going up and down. Okay, it's going up and down. We got to this place, in our reverse, start going up, drop a little bit. Okay, so you can see the market is on the down side of the market. So I move over to 1 hour. Let me move over to 1 hour. Okay, move over to 1 hour. Now it's giving me. Now you see the difference between the large time frames and the 5 minutes, 15 minutes time frame is that there's a lot of noise in the 15 minutes and 5 minutes time frames. But in the daily, 1 week, 1 hour, the noise is minimal. Okay? What I mean noise is that there are a lot of you see the picture clearly in the larger ones, in the larger time frames and the smaller time frames. But they are the same thing anyway. They are the same thing. But as I'm scrolling over, you discover that the shapes are different. Okay, the shapes are different, but it's the same. It means the same thing. All right. So now this is the 1 hour time frame. That line is still there. The line I drew, you can see the line is taking another shape. That's what I say. It's the same thing, but you can see where I drew it in the daily, it was smaller, right? But now it's going bigger. Why? Because, like I said, there are a lot of noise, a lot of things that will be elaborated in the smaller time frames. See, that's why it is now longer. Okay, but it means the same thing. All right, so that is that. Now that we've gotten what the overview of the market, which means it's going down. Okay, so that would be at the back of our mind, whatever we are doing in smaller time frames. Now this is 1 hour. Okay, now look at the shape now. Let me zoom it a little bit. Okay. Let me zoom it so that you can get what I am trying to arrive at. Now, let me go to 15 minutes. Okay, let's see. Okay, let me go to 15 minutes and see what 15 minutes is saying. This is 15 minutes. Okay, so now in the 15 minutes. Okay, this is the 15 minutes time frame. Okay, now I drew this earlier on, though not here for now. Now, the reason why, let me delete it and tell us the reason why. Okay, let me just shift it. Let me shift it a little bit away from this place. Okay, now look at the market. These are candlesticks anyway, but we are now looking at the movement of these candlesticks. These are price movements. The price is going up and down, up and down, up and down. You see, in Forex, there is no way you will see the price. The price can never go straight like this. No. The price can never go straight like this on a straight line. No, it will always go like this. Like impulse movement. It will move impulse movement like this. After then, it will come down like this. Then later on, what next? It will go up again, like a zigzag. That's how price moves. It will go up again, like that. Go to this place, it will change again. Okay, it will change direction again. So that is how it will retrace again. Then you move again, go to a stage again, it will go up again. It will go up again. So that is That is the movement of the market, like a zigzag. It will never give you straight. No, it will be moving, in a zigzag format. So that is how the market goes. Okay, it moves in a zigzag format. It never go straight. So now the market has been going downward. Then later on, it started going sideways here. Okay, started moving sideways. Now it comes down here, this place. It moves up here. It goes down. Move to this way. It goes down. Now from here, it pushes up straight to this place. Okay. Now it went up speedily, straight to this place, and it got to this place. It came down. The question we ask ourselves: why did it come down from here? Why? Why didn't it continue moving straight? So something has to be done about this place. So likewise, this place also, something needs to be done here, because if you look at the market, the price moved sharply from here upward with a giant candlesticks. Take note, giant candlesticks. Okay, it moves here with a giant candlesticks. Okay, so what you will do here, automatically you're going to draw here, automatically becomes your demand zone. It means buyers enter the market speedily here and pushes the price to this point. Okay, he pushes the price, buyers pushes the price from here to this point. Now you have to draw your demand zone. Now the way to draw your demand zone, you take up the rectangle mark. Now you take it from here. Okay, before then, let me show us how you do that. You take it from here, from the previous candle before it started going up. The previous candle is the red one. Okay, you mark it from the top from the top point to the middle point to the last point. Okay, then you now draw your line, your demand line. Okay, cut it across. That's why I came about this one. So I cannot delete this one. Okay, let me delete this. So anywhere you see any movement like this, a sharp movement, it must be up to 3 candlesticks, not small candlesticks, not small candlesticks like the one that started it. No, it must be a giant candlestick. The 3 must be giant. Okay, like this one's here. So then you now draw your demand zone line from the previous candlestick before it started going up, which is the red one here. Then you drew it across, just like the way I've done this. That is your demand zone. It's your demand zone. Okay. Now we'll now move further. The price got here and dropped down immediately. Now what happened? This place automatically turned to your supply zone, because you can see 3 big candlesticks, and the price got to this place and dropped. Okay. So what you will now do, you draw your demand, your supply zone will now be this place, from the previous candlestick to from the top of the previous candlestick, right, to the last one there. You start from the top. Okay, look at it. The green one, the previous one, to the down. See. So that is how to draw your demand. Of course, you can give this another color if you want to color it. Okay, you can see when you click on it, this something will come up. You can give it another color. Since your demand, your supply, you can give it red color. Okay, so now the game has started. So this is how to plot. With the moment you open your chart, please, this is what you observe and you start plotting. Okay, so now that we've done this is the first thing we saw. Now the question will now ask yourself, how do you understand this? Now you can see the movement. Let's take the movement from here. It went up, down. Let me lose. You can see the movement from here straight up. Okay, it got to this place. What happened? It came down. It came down. Okay, it came down again to this place. So one thing you're going to observe is that the price will always come back the demand zone. The demand zone. It will surely come back and test the demand zone. You can see it came down here, almost touches this line, but it did not touch this demand line. The demand zone, and so, but we got to this place, he went back up. Now, what he's trying to do is that he want to test this supply zone. So he went back up, test the supply zone. Okay, it came out, he tested it again. So the moment it came out, what are you supposed to do? The best thing to do is the moment it started coming down with a giant candle red stick. This represents the price. It's telling you that the price is going down now to go and test the demand zone. Okay, to go and test the demand zone. So the best way to study this is when you see this thing goes up and drop down in the first place, what you do, you hold on. You don't take a trade, you hold on. Allow you to touch, go back and touch this, the supply zone. You can see he didn't touch the supply, he didn't touch the demand zone immediately. He stopped halfway and went back up. Since he's going back up, you hold on. It means that he wanted to go and test this particular zone first. So it went up again, it touched the demand zone in the first place. You hold on and wait for your confirmation. Number one confirmation is touching this place. That's number one. Okay, that's number one. You have to identify this demand zone is number one. So it came down again. You observe it. It did not give us any sign here. It only bring out this giant stick, this candle red stick. But what happened? The other one was weak. So what you do, you slow down. You don't enter. You wait for it. It started moving. You can see it went back up again to test that same demand zone and supply zone. So it started giving us smaller candlestick. That's an indication that it's no more going. It can't break this part. When you start seeing something like this, it's an indication telling you that price is not breaking above, it's not breaking beyond this supply zone. So you can see it started giving you weak. This line you're seeing here is called weak. Please make sure you watch the video on candlestick, please, so to understand this thing better, to understand the candlestick better. Okay, so it's giving you a smaller line. That line is called weak, and smaller body of candlestick. You can see the body of candlestick is very small. This is an indication telling you that it's no more, it's likely not going to pass this zone. So it started dropping. You can see giving us smaller one. The next thing you see, it brought out this long candlestick, red. Red means buy. It means buyers has entered, because this supply zone means that there are a lot of, sellers. This supply zone means that there are sellers here. Why this demand zone means that there are buyers here waiting. Okay, there are buyers here waiting. There are suppliers, people are there, wanted to buyers, sellers are here waiting. So as it goes, it dropped down. You can see it shows this one. It shows that it's going down long. You can see this one is longer than every other one that is here. Then the next thing, you brought out another one again. What you will do, you enter for your sell here immediately. You enter for your sell. Sell means short position here, means sell. Click on short position. You enter from here, you enter your sell. You enter your sell and take it down to this place. Your stop loss will be here. You can see what happened. The moment you can see, the moment you enter there, what happened? Price went down and touched this place. You can see, look at where it touches it. It touched you now tested this supply zone, demand zone. You see, you enter the moment you saw that sign, like I said, you enter for a sell and you put your profit here. So the moment you draw this line, then you enter your position here. This is your sell position. You now mark out the area, you put your stop loss. Your stop loss is here, 144.671. You go to your broker, you open your broker. For example, if you're using BTC Dana, you go to your BTC Dana, open to USD JPY, and go to take profit. Click on sell, go to take profit, and type 11441.657. I have done a video on that. Please watch the video on BTC Dana. I think it's in our group. So watch it, you see it like this. Okay, the moment you see, when you enter the BTC Dana on the USD JPY, you set it like that. You go to take profit and type this figure, this 114.662. Then stop loss, you type 146.368. Then that's all. You click OK and you enter the trade. So you can see what happened here. The market went, you can see the trade goes, started going, it came up here. You can see it came up here, it goes down and touches this place. That is how to take a trade. That's how to study. That's how to study study this. The analyze the chart. What we are doing is we are doing um, we are doing technical analysis. What we are doing now is we are doing technical. They call it technical analysis. You can see what happened. It goes. We enter the market at this point. We enter the market at this point and take profit at this point. Touches this place and take our profit. That's a simple way to do it. Okay. So now the moment you got here, it started going up again. You can see it going up. Okay. So we hold on again. It must touches any of this one. It's either it's going up, it touches one, or it's going back again to come down to touch this one. It's going back to either it touches the supply zone or the demand zone. If it touches the demand zone again, you enter for. If it gives you another sign that it's going up, you enter for sell and take your profit here. So that is how it works. Okay, that's number one. Let's go to another pair and see what is going on. Okay, this one is Euro USD. Okay, this is Euro USD. What is happening here? Okay. This is 15 minutes time frame for Euro USD. Okay, there's not much is going on here. Let's see. Okay. I drew this line. Why did I do this line? Okay, let me see. I think it's a very far one. So let's leave that line there. So at this point in time, if you look at this, okay, look at this USD, Euro USD. Okay, this place is your demand zone. Let me draw it so that you see it. Here is your demand zone. This place is your demand zone. You can see price went up, it came down, price went up here. Okay, so you can see, let me delete this line. Should I left it? Maybe there's something. Okay, let me leave it. I'll have to trace it back and see why I drew this line so that it will help us. Okay, so you can see price came down here and went back up again. So this place becomes our demand zone. Okay, now it went up, travel. You can see travel up, got to this place, it started dropping. Okay, started dropping. Here it consolidates. It was going up and down here, going up and down here. It came down and touches this place back. You see, it touches this place back, and now it's going up. Okay, it's going up. Let me trace this line back and see where it's coming from. Let me take it back and see the reason why. Okay, let me go to 1 hour time frame to see if I can get the picture clearly. Okay. This 1 hour time frame. This is where the line started. This is where the line started. The line started from, goes up, came down. Okay. Came down, and what happened? This is where we are now. Okay, I think I've seen why I drew that line. You can see the line went down here. This place, you can see it went down, it went up from here, goes up and dropped down. Okay, couldn't pass this line. It came down. When it came down, let's see what happened. It came down. As it's coming up, it broke the line and dropped down again. Okay, so this happened to be our demand zone. So it's likely the You can see it's going up. When it came up, it touches this line and it's going up again. It's likely it's going to touch this place and drop down again. So it's likely to touch that place, touch that line and drop down. So you can see it's dropping down now. It hasn't gotten to this place, but it doesn't matter. It might not get to this place. But let's watch and see what's going to happen before we make our next move. So you don't need to be faster. You can't be faster than the price. You have to follow the trend, monitor what it's doing. Okay, so you have to be patient and see what's going to happen next. That is how study moves to the next. Let's move to the next one and see what's going on. The next one. Okay, so saying. Okay, so here this is on 15 minutes time frame. Like I told us, we always go to the larger time frames like daily to check out what is going on. Okay, so this is it here. Let me see whether there is any other one. Any to let's look at this now. This place price came down here and went up again. Okay, mark this place. I'm going to mark this piece like this. So if you understand what happened here, you agree with me that price is going to do wonders. Now look at this place. Let me open up this place. So look at what happened here. Price came down here, touched this place and went back up, started consolidating and moving, and it came down to this point. I went back, touches that. Now that place, this place, so this here is your resistance. Okay, this place is your resistance zone. But what happened when it came down here? I mean, this place is a support zone. It came down to support, it moved up. Okay, now it was now going up, and it came down, and here this place is the resistance. Now automatically, I mean the support zone. Now automatically it now turned to resistance here. You can see it came up, it touches this place and came down. Here now it becomes a resistance. Okay? So what you will now do, this is your supply. Come down here. Let me draw this. Okay? Let's wait for it to see what is going to happen next. Now we can't enter for trade now because we don't know what is going on here. So hold on. When it touches this place, we'll now decide whether we are going to enter for the trade. When we see a confirmation, we enter for the trade. Okay? So let's wait for it. Let's go to the next one. This is how you check all the pairs. Okay, you check all the commodity, everything before you now decide where to trade. Okay, this is another one. Okay, this is GBP, JPY. That is British pounds against Japanese yen. Now I've drawn this before. Okay, I think it was this morning. Okay, see, that's what happened here. Price came down here, went up, came down again to this zone and went up again. That's why I drew this line. You can see there's something interesting there. I drew the line immediately. Now from this place, it started going up and down. You can see from here it went up, started going up, going down and going up. You see? Started going up, okay? You can see? Now it went up, goes down here, goes up here, come down, go up again and tested this place. That's why I drew this line. That's why I drew this line. Okay. That's why I drew this line. Now look at this place also. I also have to draw this blue line here. Now what is going on? It went up, goes up and come down. Okay. Now, what happened here is that, see, the market move, the price move from here to this place, comes down here, move backward. Now it's formed. This is what we call double top. Okay, came down, move up, touches this place, almost touches this place. So this is what we call double top, and it came down. And double top, you watch out for break up structure in double top. Okay, that's what we call double top. When it goes up, when price goes up, on down, goes up again in a shape like this. Let me draw the shape. When price goes up like this, okay, goes up like that again, it comes down here, comes down here. When it comes down here, it moves again, to this place. What happened again? It comes down again from here, started going down. Okay, so what that means is that when you see something like this, up, down, up like this, we call it double top. Okay, so you are going to draw a line here. That line is called market structure. Break of structure. It's called break of structure. Okay, this now it has broken the structure. Which market has broken this structure and it started going down. Okay. So automatically it means that the way it is now is going to touch this green line, this green supply zone, the demand zone. No, it's not a demand zone, it's a resistance. Okay, resistance as a demand zone also. So it's probably price going to touch this line sooner or later. Okay. The first line is this one, this blue line, and the second one is this one. So let's wait for it. Now you can see, though here is consolidating, So the moment you touch any of these places, you will not take trade. So that is that from J, British pounds against US dollar. So let's check the next one, USD against Canadian dollar. Okay, you can see I've drawn this line before. Okay, I've drawn this line before. You can see. Let me check 1 hour. I think I draw it in 1 hour. Okay, that's good. Look at what happened here in 1 hour. 1 hour time frame. Okay, you can see price came down here. From this angle, started going, it came down again and touches this place. I drew this line. Okay. When I drew this demand line, or you can call it resistance, the price went up down to this place. Price went up to this place and started consolidating. You can see, started going up and down, and it never crosses this place. It started going up and down. So it came down here and continued going up. Okay, broke the resistance. It broke the resistance and went up. When it got to this place, it came down speedily. You can see price came down. Anytime you see a wick like this line is called wick. The price is supposed to go up, but what happened? The buyers came down and pushed it down. I mean, the sellers came down and pushed it down. You can see that's why you are seeing this long, red, slim, this thing. It is called wick. Okay. Then they came down, buyers came down, sellers came down and pushed it down and started going down. You can see, started going down, and went back up here and again down and touches this line. If you enter for a sell here, okay, this is a perfect way to call it sniper entry. Enter for a sell here, wow, that's really a big one. This is where you enter for your sell. The moment you form this second candle line, you enter for a sell here and you take your profit down here. That's a huge one. That would be a huge one. Can you imagine you enter for a sell here and you took your profit down to this place. That is a huge one. You can see a huge one. That's money for you. Okay, so that's a good one. Take it down from here, and I think I took this trade this morning. So you can see what happened. Price when the moment it touches this, it came down and goes down like that. When it touched this line, it went back up again. Now, what you wanna do when you see something like this, as you go this place, as you come down and started consolidating, you can see try to push up. Buyers came and tried to push it up, but sellers say no, and they drop it down from this side. What you do, you just draw your line. Draw your line. Okay? This place is now in resistance. This place is now in resistance. So you can see try you can see there's a lot of weak. You can see this weak. Those lines are called weak. So it came down, came up and touches this place and dropped down again. Okay, the moment it touches this place, started going down, you enter for your sell here. Enter for sell here. Pick one. Enter for your short sell here. Somewhere around here. And take your profit down to this line again. Take your profit down to that line. You can see how beautiful. You see how to make serious money in Forex. You can see enter your market, your sell here. Take your profit down here. That is good. So the moment that's happening, you take your profit here, you look at it again, you can see it started going up. When you see that it started going, you enter for your buy here, take your profit at this line. You can see when it touches this line, you drop down again. Now it's in this zone. Drop down to back to this zone. See, very easy. When you draw your line, you'll be just be following it systematically. Follow the trend. Don't follow what your head is telling you. Follow what his price is doing. You can see we are just identifying what price is doing. I'm not following what is in my head. I'm just following what price is doing. So just monitor what he's doing. Put this in there. Take your profit there. Now it's in this zone. Now you can see it's in the demand zone. Let us see what is going to happen. So you don't rush. You just hold on. This is where a lot of people who are learning or whatever, this is where they miss it. The moment they see that price has gotten to this zone, and they will think that since he has started going deep, they will think that the price is going to break through. They will just enter for sell. No, you don't enter for sell like that. You hold on and wait for confirmation. Okay, you hold on. Look at what he's doing. Let's wait and see what he's going to do. So you can see how I map out everything, and it's going according to the way it is. So that is that about that. So let's leave that one. We're just checking what is going to happen here. So let's go to the next one. Which one is the next one? USD against Swiss franc. See what is there. Okay. This is 1 hour time frame. Okay, this is 1 hour. Okay, I'm there. Put some line there. Let's see what is happening there. It's 1 hour time frame. Okay, I've already given very good there. Going there, this is supposed to be upload. Okay, so let me look at where it is. Okay. Okay, so let me delete it. Now you can see, let's see what is happening there. This is USD HCF, that's US against Swiss franc. I've already drawn all these lines. Okay, let me just follow what I do here. So you can see now, price came down here, moved up with this angle. Okay, moves up. What happened? Goes down here. Let me try this. Let me check 15 minutes and see what is happening in 15 minutes. Okay, I think Let's see what is happening here. Okay, so okay, let's use this. Let me here so that not get confused. Okay, let me use this. Let me leave it with this. Okay, you can see. Let me start from here. This place is a zone that we can never, should not toy with. This particular place. Maybe tomorrow, move that to that place tomorrow. We continue from there tomorrow. So look at the way it is. We moved up there, came down here, and moved up from here. When it got to this place, started, you can see weak. These lines, these smaller lines are called weak. It's showing that as price is price is not deciding whether it's going up and down. There's a lot of buyers and sellers here jostling for position. That's why you're seeing it small. This here. The moment the sellers took over here, buyers move up, started pushing, the strength started going down. There's a lot of indecision here. So now price got to this place. Buyers move it up. The sellers came down here and took control, push it down to this angle. So that what we are seeing here is consolidation anyway. It's just consolidating. But what happened at the end? This is a fake. Call it freak out. This is a fake freak out. So it's supposed to go up, but it dropped down a little bit. Here in this place, you discover that so many buyers, so many traders also made the mistake of entering for a buy here, and because of this movement here, and they will lose it. They will lose all their money. That's what happened. Price dropped down. It dropped down from this place. Okay. That's why it's good for us to be patient, hold on, and see what price is going to do. So it moved up here. And see, started going down. Okay, started going down, consolidating. This is the breakthrough here. And see what happened when it got to this place. Price got to this place and it started going down. Now look at the breakthrough here. When you see something like this, okay, it started going down, hold on, and it went down. Allow you to get to your zone, your resistance zone, or your supplier zone or demand zone. Just allow you to get to the point. Okay. Now you started moving. Look at there's a zone here, but it didn't get to the place almost there. Started going on. So in this place, what this one is telling us that you should hold on and see what it's going to do. Okay, you hold on and see what price is going to do. So the other one, go to Euro, let's go to Euro, JPY. Okay, the same thing is happening here also. You can see price go to this stage, price go to this. You can see, let me draw this line here. Price got to this place, came down. You see, came down, goes up back to this place, move down here. Okay, you can see, started consolidating here, consolidate this point. So in this point, we what? We go down. Here normally supposed to be our supply zone. This is supposed to be our demand zone. You see, this place is our demand zone. Why is it demand? You can see there's a huge movement here. A huge movement in here, this place. So there's a lot of buyers here. When you come down here, you can see we try to push it up. The buyers try to push it up. And so the buyers are pushing it up back up again. So look at this place as a resistance here. You can see price got to place dropped, and now it has gotten to that same level. Let's see whether it's going to break through in this place. You see, these are the things to watch out for. You see, price came down from here. Look at the movement, touches this line, it dropped back to this zone. This place is a resistance, your supply zone, your demand zone. Okay. So, you can call it resistance, but it's a supply, it's a demand zone. It got to this place. Why is it demand? Why is it demand? Because of this movement here. It's a giant movement. That's why this place is demand. You can see it came down to that same zone. It didn't go past it. It goes up. Form another higher. This we can call it this. We can call this one higher high. Came down to test this place again. It goes out again. It came back to that same position. So all this does not happen by accident. These are the things you watch out for. Came back to this place. Okay, what is he doing? He's trying to he's consolidating now. Let's see whether it's going to break past this place. Okay, when they break past this place, I can assure you it's going to touch this line here. When they break past this place, give us any confirmation that it's going up, then we enter for a buy and put our take profit to this line, to 160.3 before 160.036. The moment you break past this line and give us any confirmation that it's going up, then we enter for a buy. That is how the market is. No stress. So you need to understand these things. And that video is very loaded. Please let us take your time and watch the video. Okay? So that is how it is. So let's move to the next one, the NU. Okay? That is New Zealand dollar versus US dollar. Okay, this is almost the same thing. I drew this line. Okay, you can see this is my supply zone. The moment price got to this place, fly down to this place, fly down to this place. Let me draw. It goes down to this place. See. The moment it gets here, what happened? You can see when it's going down, it started bringing that weak, telling us that it's no more going down again. It's going up. You can see when you're seeing this thing, it's an indication that it's not more going down. Okay, look at what is, always pay attention to what is happening at this zone, at any zone. It's where we look at the candle and see what kind of candle is coming out. That's why I say go and study one of those videos that concerning candle. So there's a candle they call morning star. And when you see a morning star candle at a zone like this, it means that it's reversing. And when you see an evening star at a zone like this up here, it means that it's also reversing, going down. That's the meaning. Okay, so you can see get down to this place. What happened? You can see, look at this giant green candle telling us that it's going up. The moment you form the second one, just enter for buy here. And I'm telling you, this one is going up to this place. It's going up to this place. To this zone here. So that is that. Okay, that is that about it. So there's nothing there again. To other ones, just be showing us. It's almost the same thing. Okay, that's how they read these things. There are more to it anyway. That's why I said you should look out for those videos. But these are the easy ones that we can easily to identify and follow. Okay, the easy ones that we can identify and follow. Okay, the other one that I want to show us is investing.com. Investing.com. Okay, investing.com. This is how I started without any knowledge of forex trading. Okay, go to investing.com and go to investing.com. When you go to investing.com, you go to the first place, go to technical. When you go to click on technical, of course, you register with your email password. It's free. Register. So you go to technical and you go to that summary, technical summary. Okay, that summary. Now when you get to technical summary, okay, in this technical summary, you will see all the for trading. You see forex, indices, stocks, what have you. there. Let's go to Forex first. Let me start with Forex. Okay. So please, investing.com, it has an app. I've showed us everything. Download it. I've given us the link in the group. Download it and go through it. Okay. Download it, go through it. You get a lot of information that you need. I've given us the link already. It's in the group. So this is the desktop one. Just go to internet and browse. And if you download, also it has this something like this there. You download it, to easy for you to monitor on your app. Okay, on your phone. If you look at this now, this what we are still doing is technical analysis. Okay, now in this technical analysis, this one is similar to what we just showed us in the graph, but this one is not graph now. It's something that you just easily do. Now, now, like I told you, this is where I started. When I was giving this site, very few people know about this site. I'm just giving it to us, giving it to us now. So now look at this US British pounds against US dollar. Okay, what is it showing here? It's giving us strong sell. You can see strong sell. When you see something like this, what does that tell you? Go and sell. As simple as that. Open your app and click on sell. Open your app, open your BTC Dana or whatever you're using. Go to GBP US dollar, open it, go to, and click sell. Set your stop loss and click sell. But here, no, the difference is that this place you can identify your stop loss. Okay, and you can't even identify your stop loss and your take profit here. All you know that you're selling or you're buying when you see something like this. So, but the best way to do it when you see something like this, still go and confirm. Open your graph, check where it's going. Check all those things before. Now it's showing us strong sell, right? Let's go to the graph and see whether British pounds against US dollar is telling us to sell. Where is it? Let's open it and see. British pounds against US dollar, right? You can see though it's going down, and that one showing us. You can see it's something. Although here it has reversed, it's kind of going up, but there it's telling us to sell. So these are the things you need to check out. Okay, you can enter to sell, and maybe this one is dropping. If this one is dropping, weigh it and see what's going to happen. That is how I started. I would just go back without checking, and it was okay by me. Many times when you place a trade and you come here, even after analyzing, and you come here, maybe you analyze and you decide to buy, and immediately come here, you see red sell. I'm telling you, your position you took as buy, it will go against you. It will go against you. When this thing reverse, when it reverses, when I take trade, this way sometimes I come here be monitoring. When I see red, when I see my mind be, I say this thing is going against me. That's how it works. Okay, so when you master these things, just set your trade and forget about it. Don't kill, don't just leave it. Just monitor when it's going. Just monitor it. Okay, it doesn't really mean that you have to take profit. No, you can get to a place. Okay, you decide to close your trade. You can see this one right. You can see this one right. So when it is green, you sell. When it's green all through, you buy. When it's green all through, you buy. When it's green, sell all through, you sell. So that is how you can see some. I think this one is green. You hold. You can see buy here also because only one green that is showing. You can see sometimes even when you buy here and green appear, it will affect it to start dropping. Yes. When you sell and one green appear, it start dropping. That's how it is. But it works better when it is all through red or all through green. Okay. So that's how about this. So you can just come here. If that one is, if you're not interested in those graphs, just come here, open it. When you see sell, and you enter sell and forget it. Okay, so that is how this will work. I saw something here. I saw candle pattern. Let's see what inside the candle pattern. Not open this thing before. Not open this candle pattern. Let's see the disappointment pattern. Video, video, video. Okay. Instant loss, 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 instant loss. I mentioned open this, I've not opened this, I've not opened this, I've not opened this. Let's see. Let me let me open this diagram anyway, 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 diagram anyway. I was thinking that it's going to give us a diagram. Okay, that's what I'm not. This is my first time. 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 I'm not. This is my first time of opening. Please don't take this in lightly. Let us look at this thing very well on our own time. This is. 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 Then this one. This one is red. 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 When you see a pattern like this is evening, when you see this candlestick at the okay, when this 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 okay, when they say the market is bullish, it means the market is going up. Bearish, the market is bearish, it means market is going down. Okay, you can see, look at the description, look at it. Evening star, high, reliability, telling you how strong it is high. Description, during an uptrend, you can see during an uptrend on a long white candlestick. Okay, the second candlestick trades within a small range and closes at or near its open. Yes, that is this one. Okay, this scenario generally shows an erosion of confidence in the current trend. Confirmation of the trend reversal is the black third candlestick. This is the confirmation. Okay, candlestick. A gap between the second and the third body is not a must. This is called evening star. 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 Small candle like this, green here, red here. This one might be red or blue. I mean, it might be red or green. No, it doesn't really mean that it must be this color. It must be red. Okay, it might be any color. It might be either red or green. This smaller one here, but this one must be red. But when you see something like this, it's going down. If you see it at the key level means resistance or supply or demand level. Supply level is going down. Okay, that is it. Let me open. Let's see the other one, the morning star. I think I saw the morning star somewhere. Let's see morning star. Morning star. Yes, morning star. Please, at your own time, please open this thing and check it yourself. Check it yourself. Wow, everything is wow. I've not even checked this place before. You can see everything is there, but I've not seen one. Okay, check out some morning star. Yeah, it's morning doji star. Okay, this is it. This is morning star. Let's open it. Okay, you can even see the sign there. The sign is there. You can see up. See downside gap tree method. You can see down. When you can see this is morning star. We see when it's coming down on the downtrend, you can see during the downtrend, okay, the market strength strengthens the bearish trend with a long black candlestick. You can see that's what they come in black. That's what they come in black candlestick. The second candlestick trades between the small range and the closes at or near its open. See, The scenario generally shows the potential for a rally as many positions have been changed. Confirmation of this trend reversal is given by the wide third candlestick. That's the confirmation. Okay, you see the money dodgy star is a fully realized bullish dodgy star pattern. It is important reversal. You see, it's important reversal signal. So when you see this at the trend level, um at the resistance level, just enter for a buy. Okay? So just come here, please come here and check on all these candlestick and the way they look like. So when you see it, you understand what they mean. Okay, when you're analyzing the market and you see something like that, that's like me giving you sign. This is Aramic cross. So let's see what it's saying. So when you see something like this, Aramic cross, after a long black candle at the low end of the downtrend, see that's when it's getting close. A white candlestick opens higher or at the previous candlestick closes and closes at or around it. So please go and check out all this. Okay, check out. Okay, so that is that about that. What else again? Am I missing out? What else is missing out? Okay, so okay, yeah. Now what we are learning, what we are doing so far is technical analysis. Fundamental happens to deal with news. Happen to deal with news. It's all about news. It can change any direction of the market. Very, very important. News in the market is very, very important. We have two types of analysis, technical and fundamental. Even after you've done your fundamental, your technical analysis and you enter for a trade, anything can happen. There might be a bomb in US, it will change the market. It will change the market. The war that is going on now between Russia and Ukraine is affecting the market. That is what is affecting gold today and other commodities. Gold is going up almost every day because of that. Okay, so these things happens. There's some people who are praying that war should not stop because of what they are getting in the forex market. Okay, in the US, there's always news that comes out every month. There are three major news that comes out in US. There are so many news that comes out in US almost every day. The news happens every day, but there are major ones. There are major news. There are these three news that comes up in US. Okay, these news are one of them. The first one happens every first Friday, if I'm not mistaken. That one is called MPF. Okay, then the one that follows the next week after this is called the CPI. It's called the CPI. This CPI stands for Consumer Price Index. Okay, Consumer Price Index. Okay, Consumer Price Index. Okay, then the third one is PPI. Something. The last one, the I stand for index. I've forgotten. Something price index. I've forgotten. Okay, that's this one. The MPF comes first. The CPI comes second. And now, last Friday. Today is Tuesday, right? Last week Friday. Oh, that's on the last Friday was the first one, MPF. Then this week, I think tomorrow will be CPI. And the other one will be PPI. So these are from this news, and it happens 1:30 Nigerian time, 8:30 American time, 1:30 Nigerian time. So you need to check out on these dates. You need to know these dates. You need to know it's very important to know these days. Okay, and like I said, the first one, MPF, happens I think first Friday of the month. If I'm not mistaken, first Friday of the month. Then the following ones happen Tuesday and Wednesday, respectively. Sometimes Tuesday and Thursday, sometimes next Wednesday, and like that. Okay, that's the CPI and PPI. Okay, they are very effective, very especially CPI. Sure, the two of the first two very very important. Okay, very very important in America. This one is of course price index. You know what price index, and this one is non-performance. The NPF means non-performing farmer or something like that. It means that uh, this one represents the goods that are supplied, that are from the farm. Use that word. Okay, or is it from the farmers? I can't remember. Okay, but I know it's NPF. All right. So this is the news that we need to check out from. This three news very vital. Okay? Anything you're doing, make sure on the day of this news you are write it up before 1 o'clock. Except you want to take the risk. Except you want to take the risk and say, okay, let me see whether the news will go my way, and you leave the trade. Okay, if you're lucky enough to go your way. Okay, and also you can trade the news. Some people trade the news. The way I trade the news is that I wait when the moment it's announced. I just look at the trend and I'll see where it's going to. I just enter the market, and the trend of the news, the momentum, lasts between, let's say, 10 to 15 minutes. After 10 to 15 minutes, it will stop. And if you do not come out from that market when it stops, it will go against you. It will reverse. It will go against you. Okay, so that's how it was. Some people will wait after 20 minutes, they will enter the market. So that's how the market is. Let's see in that. I think I saw. So so indeed the same. Okay, okay, okay. Same investing.com to this and check. I saw calendar. Okay, go to tools. Go to tools and economic calendar. Look at economic calendar. Click on economic. Click on economic calendar. It's loading. Okay, so this is the economic calendar. Today is Tuesday, right? Okay, let's check last week Friday. Last week Friday is the first Friday. Now let's go to this is the calendar. Last week Friday is in August. Last week Friday is the second. Okay, let's see second. Click on apply. Okay, this is it. This is second. Go to look for US flag. Now look at it. 8:30. Where is it? Oh wow, look at it. NPF. Okay, NFP. NFP, you can see non-farm payroll. Non-farm payroll. That's the meaning of NFP. Non-farm payroll. See? It's for July. So they announce it in every other month. So look at the announcement. The announcement came. This is the actual. The actual is higher than the actual is less than the. This is the. Look at how it works. This middle one is the forecast. You know. This middle one, that in this, it's that in this, it's that in this, it's that in this is a 130 announcement, just announcement, just announcement, just announcement, just announcement, just announcement. That's the last month announcement. This is the forecast. So if the actual, the current, the announcement is higher than the forecast, go positive. It means positive. Go for buy. Yeah, will be green. But if forecast is higher than the actual, that it will go to red. It will go to red. It means sell. Okay, it means sell. So sometimes what I used to do is that I wait. When I see this, I will not enter the market. This sell, I enter sell. But sometimes I don't enter sell blindly. Also, I also check the trend. But there are times you go, you think that as it's showing red now, you go and enter for red without checking. You're surprised that maybe after entering that spot that is on buy. Right. So you need to check the flow before you enter. So now you can see this from US. Any currency that is attached to US dollar will experience this. Yes, including gold. including gold and I think silver too. In short, anything that is attached to US, like euro against US dollar or US dollar against Japan, anything that if this currency that is paired with US dollar, this same result, this same outcome will affect it. It will affect it. Sometimes what happens is that there are some currencies it will be affecting negatively, while some will be affecting positively. When I mean negative, that is buy, sell. Positive is buy, negative is sell. There's some currency you will see the news is positive, okay, but the currency is negative. Why? Because of the position of dollar. Because of the position of dollar. Dollar might be in the left hand side against it, and it will going down. Once in the right hand side before it will going up. So that's how it works. You just look at one, just look at the currency, look at the graph, and see what is happening. Okay, before you enter the market. Now this one is Friday last week. So this result, this announcement always comes out early in the month. You can see this one is first. The next one is September. So the first Friday is on the 7th. So the next announcement for NFP is on the 7th of September. So put that in your calendar. It's on the 7th of September, and by 1:30. So put that in your calendar by 1:30. In the first Friday, it's always first Friday, and NFP is always first Friday by 1:30. Then the other one, CPI, the following week is either other Wednesday or so. Let's check this one and see which day it is. Let's check on Wednesday. Let's check Wednesday and see whether the news came on Wednesday, 8:30, Wednesday, 8:30, 8:30. There was no news 8:30. So let's check Thursday. Thursday. Let's check Thursday. What happened on Thursday? 8:30. America, Thursday. Nothing happened. Okay, that's right. No. What today is 6. Let's check today. Today is 6. Let's see. Okay, 8:30. Let's see what's happening here. 8:30. Let's check tomorrow. Let's see. Wednesday. Okay, that's tomorrow. What's going on? Let's check again. Or is it next week? Okay, let's check on the 14th. Wednesday 14th. August. Okay, it's next week 14th. It's next week 14th. Okay, 8:30. Yes, CPI. You can see CPI. You can see CPI next week. This is it. Next week. It's next week. So put that in your calendar by 1:30 on the 14th. By 1:30 on the 14th. Then the next one will be the PPI. The PPI will not be on Thursday. Let's see. On the 15th. Yeah, the PPI will not be. Let's see. The PPI will not be. Let's check Thursday. Let's check Thursday. Okay. Uh, let's see. Yeah, this is it. No, no, that's not it. Let's check. What did I? Try this. Let's see. On Friday, not on Friday. Let's check on the 15th. Let's check on the 15th. Like this is. Mm, so it's somewhere. So it's somewhere. On the 14th is on the 14th is CPI. On the 14th is CPI. So let's just take that on the 14th on and see what happened when it comes nearer. We now get the date of the PPI. So these are the three major dates you need to put in your calendar. The NFP, the CPI, and PPI. These are the three major announcements in the US that always have heavy impact in the market. Okay, so I guess that is that. Am I another one that am I leaving behind? Okay, so let's make a recap and see back to and see what's happening. The best way to trade the news is to wait. Okay, or the way I trade the news, I wait for um, maybe when about 10 to 15 minutes after the trend, after the momentum, because the first 10 to 15 minutes, the momentum is always good. So many a times I wait after the momentum and before I start trading. Okay, before I start trading. Sometimes though I jump in immediately. I look at the trend, I look at where it is high. No, I look at as going up, if it is high, if it is low, wherever the momentum is going, when I look at it that is going on the sell side, I will enter the sell. I enter to sell. So that's how I do. So the moment I enter, just many times I don't wait until take profit. The moment it gets to a particular amount that I feel I'm comfortable with, I'll close the trade. I won't take in. I close the trade. I ain't taking trade. That's how I do it. Or I wait completely after the momentum, maybe 10 to 15 minutes. Then I'll now enter trade. So that is how I do my own trading when it comes to news. So these 3 days, these 3 days, we need to put it into consideration. Next month, September, watch out for it. So depending on how you want to trade, you want to wait, you want to enter, you enter. But you need to be very careful when you place a trade before that time and the trade is still running till 1 o'clock. Please close it. Lose it. The better you lose, you lose a little bit of amount of money than your account to clear out, or you lose a greater part of the amount. Because there are many a times. Okay, that's why it is good for us to use stop loss. Okay, that's why it's good for us to use stop loss. When you use stop loss, when it comes that like that way, it's going against you to hit your stop loss and you lose a little bit. Okay? So that is that. So the that is how to trade the news. Anything that I'm looking at, uh, I'm looking at, I'm looking at. Okay, let's go and check our trade and check our chart and see what is going on in chart, in chart, in chart, in chart, in chart, in chart, in chart. See it's our chart. See it's our chart. All right, I can see this trade is going up now. I see it's going up. It's going to hit. Remember we said can see, remember when we touches down here, it moves down, goes up again, and goes up again. See, you see. Now we'll take so we can take a trade here and take a trade up here because it touches down this one and it's going up again to hit this place. Okay. The moment you touch down this place, you can enter for a trade here. Like I also can enter for a buy here and take take profit at the top of this place. So that is how you trade. Let's see what other ones saying. You can check the other ones. Okay, look at that one too is going up. Okay, 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 it's going up here, it's going up here, it's going up to touch our zone here, our resistance zone. Okay, from one resistance to another, one resistance, you can trade like that from one resistance to another. You can see it's going. So that is how we place that's how we make our trade. That is how we can see this one that has crossed past this line. You can see it's going back to test this line. See, we test it, can even go up higher. Can even go higher. Okay, can even go higher. You see, and touch it and go up back to this line. So this is how the monitor. Please always go back and check what is happening. Watch the video very well. Please watch the video and understand the candlesticks pattern. At least identify at least three. Three is okay. Three candlestick pattern, know it, and so you can identify it whenever you see it. Okay, so let's check what is happening in the day. Check what is happening in the day. This is good. So that is how we trade. That's how we monitor our trade. So thank you.